All right, guys, back to work, back to work. Those trades aren't going to take themselves this week, are they? Big week ahead. Hope you guys had a great weekend, but it's Monday evening. It's time to get back to work. 18th day of October, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background, as you can see. Gold's ready, Nasdaq's ready, S&P is always ready. Isn't it glad to see you are ready right along with us? Boy, oh boy, where do I begin? There are tons of trades setting up, literally tons for Tuesday's trading session. Got some nice strong runs higher on the E-minis. You know, we get a ton of bullish momentum on the S&P and the Nasdaq. I've got 3 different types of pullback entries I'm watching for on the E-minis. So make sure you watch this video tonight if you're an E-mini trader. Over on the gold is trying to rotate down off the high of a range. I'll tell you, gold looks pretty straightforward for some shorts, but there are some definite traps on that gold chart. I want to make sure you're ready if you're a gold trader like we are in our trade room. So we'll love to sell this rotation on the gold right now, but again, you'll see tonight in the video why I'm a little bit skeptical of the short side, and while the buyers might just have a great opportunity for a nice short squeeze on the yellow metal for tomorrow. So again, lots of great trades setting up. By the end of this video tonight, you'll know my favorite trades for tomorrow. I'll make sure we know our best entries, our best exits, the setups I'm looking for. I'm going to also make sure to make you aware of any traps, any dangers kind of lurking out there for tomorrow to keep yourself in the green, whether you're trading on your own or whether you're trading with us tomorrow morning in our trade room. Now, before we jump into the video tonight, though, as always, make sure you subscribe to our YouTube channel. I publish these videos on this channel every evening, my best trade ideas, trading psychology videos. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you have any questions, drop those questions for me in the comment section. I would love to answer any questions that you might have. And if you enjoy this video as much as I enjoy making it, do me a favor, hit that like button here on this nightly newsletter. Really appreciate you guys tuning in and carving some time out with me every evening on this YouTube video. But make sure you subscribe. In the meantime, let's get this video going. Introduction is out of the way. Tuesday is right around the corner. Got a big week ahead of us here. Again, everything pretty much bullish right now on the E-minis, right? S&P is bullish. Nasdaq is bullish. You probably know what I'm going to say right now. If you watch this nightly newsletter every evening, anytime we see this much momentum in one direction, there is a big bullseye, right? Buying that pullback here right now. So again, I got 3 different pullback patterns or pullback setups we'll talk about in tonight's video. But you know, there's also some ranges down here too. Range here, ranges. You know, ranges act like magnets. That was a really big move today. We're sitting at some major areas of resistance. Is there any possibility this market may reverse and run lower? Absolutely. With these markets these days, with the pandemic almost out, with the stimulus packages flying around right now, there's always potential for a reversal. So I'm going to make sure we know how to stay out of trouble for the reversal, how to capitalize on that reversal. I definitely got you covered both the long side and the short side on the E-minis. And then again, over on the gold, I would love to trade this rotation on the gold, but I got a bunch of support. I'm just, again, there are some definite traps here on the gold. I've got a really nice area up here to short this thing. But honestly, if those bears can't get their hooks in this thing, this could easily rip. Got a big level from last week waiting overhead. And of course, we'll also talk about the breakouts going lower here to complete that pendulum swing, right, on the gold. So again, we're gonna finish up tonight on the yellow metal. Got a bunch of good setups we're tracking for tomorrow. Speaking of tomorrow, right, let's not forget about tomorrow. Tomorrow is Tuesday. Let's make sure we take a look at the calendar. Let's make sure we're all on the same page here as far as the economic news goes for this week. Now, really, just to be honest, the only real news we have to worry about as S&P, Nasdaq, and gold traders at this point in the week will be on Thursday and Friday. And you could definitely say the biggest news of the week is probably that Friday morning, that PMI composite number. So really, besides any, unexpected headlines that we're seeing, we've got, again, I talked about, in the introduction here, here. We have a lot going on at the Fed right now. They're playing around with the idea of tapering stimulus in the month of November. So we'll see if we hear any updates on that this week. That's pretty much going to be the stuff that could potentially kind of shoot these markets moving around here, because really there's no major news until Thursday and Friday morning. Yeah, we get some housing starts tomorrow, that 830 number. That's it is what it is. I don't think we're going to see that be the big catalyst for tomorrow. I would imagine Harker, Bostic, I would imagine those have more potential to really get these markets moving. Remember, as of last week, we pretty much see employment numbers look good. Well, good or bad, whatever you want to call them, but employment numbers are rising, inflation numbers keep rising. So the word on the street is we're going to hear in November they're going to start this withdrawal of stimulus, right? The tapering of stimulus, raising rates, not buying as much bad debt. And so really at this point we're listening into these Fed speakers, Harker and Bostic tomorrow. We got Bostic, Evans, Ballard, right? As you can see, they keep coming this week. Those guys, those Fed speakers are the ones that could potentially, surprise us and say, you know what, we're not going to taper in November, right, et cetera, et cetera. So besides that, there really isn't a lot more market catalysts that we're watching here for tomorrow. Housing starts, probably not going to be the big market mover. Will we hear something out of the Fed speakers tomorrow, though, that gets things going? That is going to be probably the biggest question mark on our radar for tomorrow, with all the big news scheduled later on in the week. Now, don't forget, tomorrow morning, we're going to be in our trade room, 8 o'clock Eastern time, right? We'll have my gal Mary Daly speaking at 8 o'clock. We'll see if she gets some feathers ruffled tomorrow morning to get this stuff going. Don't forget to come out and join us every morning at the opening bell in our trade room. Let's get back to those charts, though. So now you guys know there's not a lot of major news on the schedule for tomorrow. We will be listening in to Fed speakers to see if they break the rank and kind of go against what the Fed speaker said last week in his press conference. Back to the charts, S&P, Nasdaq, and of course the gold. Again, E-minis are bullish. Gold is for the most part bearish. Let's jump first into the E-mini S&P. My favorite out of all three of these markets is always the E-mini S&P. You can begin your career and end your career right on this E-mini market. So really a big believer in this for all of our clients here at School of Trade. Now, what do we know right now on the E-mini? What's the most important factor that we see in the chart? The most important factor right now, we're definitely, as you can see, running into some overhead resistance. We've got this 79.5 area, measured move area. The most important factor in this chart is the strength of this move. Not so much the sheer strength, the Nasdaq, right? Nasdaq just went right higher all pretty much all day today. But see how they kind of grind higher. They never really give anything they never really got us a deep pullback this afternoon. So, anytime we see, first of all, anytime we see this much strength in one direction, we have to assume there's probably going to be another leg coming. And we know that buyers are likely going to be looking to buy that next pullback wherever it goes to. The second thing is that anytime we don't see any real pullback like that, you have to think that any pullback right now is going to be seen as like water in the desert, right? Please let me in on this before we make that run, potentially back up to those are all-time highs up there, right? So there has to be a little bit of FOMO out there. There has to be a little bit of that. Please let me into this market right now. And that kind of leads me into the game plan for tomorrow. Now, we know there's a lot of bulls here. Again, I know we're at major areas of resistance. We probably don't want to just buy right here. Think about these three pullbacks, right? There's three general ideas, three techniques for pullbacks I look for in these situations. One is a shallow pullback, two is a modest pullback, and three is going to be a really deep pullback, which between you and me, I hope we get that deep pullback. Those are my favorite, and I'll talk more about that as we go deeper into this video. Now, what's my big concern right now? There's always two things on my mind, and that is momentum and location. Right? There's always two things going through my head whenever I'm thinking about trade. How is momentum? Momentum is incredible, right? Lots of bullish momentum. Okay, how is location? Yeah, location's not that great, right? Up around areas of resistance. So when I see a lot of momentum, but in a bad location, that always tells you the shallow pullbacks have to use traps. right? Which is not a big deal at all. We just have to wait for a trap entry on this pullback. So a shallow pullback right now, right? Again, lots of momentum, but I'm concerned what? I'm concerned I'm going to buy right into those highs. So when that happens, what you want to do is I like to use this little two-try failure setup with a trap entry to grab that, right? To grab that trap. We may not get much of a pullback right now. There's a lot of momentum for the bulls right now. So if we don't get that pullback that we want, I'll show you more examples here as we go. If we don't get that deep pullback, that trap's going to be your bread and butter going higher. Okay, now, what if we pull back a little bit deeper? Right? Yeah, now we're talking. Now get me into some of these prior swings. Now get me into some of these channel lows, right? Now start to get me into some support levels down here. Now, how is momentum? Momentum's still pretty good. How is location? Yeah, much better now. So if I can get a pullback now into my buy zone, my battle zone as we call them, now I really have a good setup here for what I call a failure into a pullback combination. Failure, in other words, we get underneath the moving average. The sellers will almost always come in. I did this all the time when I was a new trader. I'd go, okay, we've reached resistance. We see a strong pullback. Well, surely this market must have gone too far. I should sell that first pullback. No, anytime we see that much momentum, trap in those bears, right? Once they try to short that pullback, now all their stops are sitting right above that high, right? So what we'll do is look for that entry going right into those stops. And then sure enough, what happens is a lot of traders won't take that failure, but once they see it kind of up and over, they'll grab that pullback. Okay, these are combination setups. Failure into pullback combination. Where would the target be on this? Target 1, back to the high. Target 2, up around that channel, right? And again, I gave you that third target I mentioned earlier, right? Was that measured move. And the measured move, again, 1 leg, 2 leg. We don't know how far it'll pull back, but that'll give you that third leg, okay, as we go higher. Here's my third pullback. Okay, here's the third pullback. The third pullback. Now, I'm going to be honest, this one has some variations to it, all right? I'm not going to cover all the variations right now, but I'm going to go over some more variations as we go deeper into this video. So make sure you watch the entire video because I'm going to talk about, you'll see as we get later in this video, there's a bunch of different ways we can trade deep pullbacks. For example, as we get that deep pullback now, okay, now, how is momentum? Yeah, see, momentum now isn't that great anymore, right? It's a really deep pullback. How's location? Location's great. Why? Because now I can risk small to earn large, right? So remember, you always want to think about what are those two questions, right? How's location and how's my momentum? Location, if I get a deep pullback, is fantastic. But momentum, not so much, right? Because anytime we see a strong move, we oftentimes see another leg, right? That's exactly what we're trying to do being a buyer. So if it really pulls back strong now, what's the best way to time the entry on this? I'm not going to get very aggressive on this. I'm going to stay patient. I'll let the bears try once. I'm going to let them try twice. Now, again, there's a lot of variations of this. But here is the general idea behind it. The general idea now is the bears are now stuck in this thing short. Where are their stops? Where's their pain? Their stops are right above the highs, right? Their pain points are right above those highs. Now, watch closely here, because this is the most common entry. We'll oftentimes get that failure signal. That's the easy one. But then we almost always see it snap up. And instead of getting that pullback combination, which will work in this situation, we almost always get this trap. So we'll run up, shallow pullback, higher high, and that's the money right there. That's the money trade. Okay, again, a lot of combinations. This is a 2-try failure setup, right? 2-try failure into that little trap, right? Little trap. Now, guys, I love traps. I mentioned traps on the shallow pullbacks. It's not the most common of my setups, but is by far my favorite. Traps allow me to buy at support. They allow me to buy with a small risk for a big reward. They allow me to trap in the opposite side of the market, which means when I get in, other, kind of the weak hands are getting forced out for a loss. Guys, if you haven't learned traps yet, most importantly, combinations of failures into traps. What I'll do is I cover all these details in my quick start class. We get a great free trading course, our quick start class. I'll put a little pop-up there for you in the upper right-hand corner. I'll tell you, if you're like me and your goal is to earn daily income, weekly income in these markets, that quick start class will give you a 3-step trading strategy, the same strategy we use every day in our trade room. I'll show you hundreds of examples of how we apply failures and traps and pullbacks on our favorite markets. Again, if you're looking for a simple kind of formula to follow, a simple plan to follow, that 3-step strategy is exactly what's going to get you on the right track. And again, I've got hundreds of examples in that quick start class of how we apply things like a 2-try failure right into that trap to go back up and retest those highs. So make sure you grab a copy of that free trading class on our website, that little link that popped up there in the upper right-hand corner. You're going to love that free course. Now, right now, you're probably wondering, okay, Joe, what if it turns around? How do we know when I can sell this thing going lower? Here's how you know. If we get the pullback and the bears hold the pullback and jump off the moving average, okay, now remember, the most important factor is it doesn't matter how strong the pullback is. If the pullback's really strong, I'm going to wait for 1, 2 and hit them, right? And take it higher here no matter what. But if they get a strong pullback and the bears can hold the test of the moving average, and if we can get some strength jumping off the EMA, right? That strong move, we call these 1, 2, 3 reversals, right? 1, 2, 3. That's where I now can mark up that new low. I can mark up that new channel. And what I'll do is I'm going to drill down to a faster time frame, keep in mind, and sell off the high of this channel. Remember, this is a 7,000 tick chart. We're not going to trade a 7,000 tick chart in our trade room tomorrow morning. My 2 favorite entry setups off the high are traps, failures. Failures oftentimes turn into pullback combinations. Again, you're going to learn all those details for the specific entry techniques in that free quick start class that I mentioned earlier. Where's my target going to be now for the bears? It'll be all the way down to that low, right? All the way down to that low. Now, when it comes to reversals, okay, there are a couple different variations of that. I'm not going to cover them all in the S&P. I'm going to keep this video going, so make sure you watch the rest of this video, and we'll talk more about the different variations of how reversals work, all right? But now you get a good idea of how to apply the pullback and the reversal now on the S&P. There is going to be a chance we go sideways up here. Anytime we see a big move in one day, the following day, we'll oftentimes go into a range. If we see a trading range, okay, we talked about this last week, and we even touched on the idea of this inside the trading psychology video last Wednesday evening, if you recall, right? Whenever we have a bull market into a trading range, how do you trade it? What you want to do is wait for the range, right? Let's say we end up going sideways here overnight. Wait for the range. Then we want to do is find levels of support underneath the range, right? Prior swings, channel lines, things like that. And then, this is very important, we want to wait for the pullback. The range, remember, anytime we see a range, ranges act like magnets. Wait for the pullback. Wait for the bears to come in. Get them involved. Let them try to sell that breakout pullback. I'm not a big fan of trying to pick the bottom on this. It's very difficult to pick a bottom with a sharp pullback like that. Oftentimes, you'll buy the first test, right? It'll come right back. It'll stop you out and then go without you. I'm not a big fan of picking that bottom like that. So what I'll do is, very important here, pay attention. I'm going to make sure I wait to trap in those bears, use the failure pattern now to buy higher, and then really, really important here, watch. I'm going to mark up the amount we go below. I'm going to mark up the amount we go above. That's the objective now. Now, look left, find the new channel. What we almost always get is something like this. As it goes higher, find that new channel, find that trap, and grab that trap. Okay, your goal, again, is the failure below the range, off support levels below the range, and then trade the rotation. Right? We talked about this last week, right? Trade the rotation. Where is the market trying to go? It's trying to complete that pendulum swing. Okay? The amount we go below the range is the amount we go above the range. Okay? We always say in our trade room, trade the rotation. Wait for the breakdown, grab the seller failure, trade the turn, I like traps, and again, you'll see a lot more examples of that inside that free trading class. Okay, as we go higher, how do I buy it as it goes higher here? There are really 3 different ways I can buy this as it goes higher. Okay, I'm going to cover one right now on the S&P, and I'll cover some more here on the NASDAQ as we go. All right, sound like a pretty good plan? We have the measured move right there. Okay, whenever I'm kind of running into resistance like this, one of my favorite ways to buy a breakout is called a 2-try breakout. That is a strong run up, a shallow pullback, a higher high in price, and a trap. Now, when it comes to this breakout, what you want to do is you want to really draw that channel nice and tight, and then look for that trap entry right below a prior swing off the low of that channel. Okay, oftentimes this channel feels like it's too tight. It will be very tempting to want to find a big channel like this. All right, but mark my words, if it jumps up, if we see a shallow pullback and that higher high in price, your best bet here right now is really draw that channel tight. Off that low, find that swing and grab that trap. We call these 2-try breakouts. Now, if we don't get this pullback and the market keeps on running, I've got targets above at 90 and a quarter. I've got 96, which I think is the best possible target. And then, of course, you get the 4,500, which is that big round number before we start flirting with those all-time highs again, maybe later on in the week. All right, guys, so really, I think pretty easy breakout pattern as we go higher. But again, there's a lot of variations of this. There's a couple different ways to break out, a couple different ways to deep pull back, and a few different ways to trade this reversal. You want to keep it going? You want to keep it going? Again, if you haven't done so yet, make sure you grab that free quick start class. It's a great roadmap for you. You know, half the battle in making money every day is just having a game plan to follow. And I laid out pretty darn easy in that free quick start class. Let's keep this party going. How about the NASDAQ? NASDAQ is pretty similar, as you can see, to the S&P. A lot of similarities, but we definitely have some differences, right? You'll notice here the market kind of slingshots off the low, right? It runs lower and kind of slingshots. Anytime a market starts off going lower and then kind of slingshotting higher, one of the easiest ways to find a target is to measure the amount we went lower and then project it going higher. This is kind of another variation of how we might use a measured move, right? Same thing we saw on the S&P, just a little bit different spin on it. I do have a measure move on here. I got this leg, got this big second leg, and then depending on where we pull back, we know how big the first leg is, so we know how big that next leg will be. We just don't know how deep this market is going to pull back right now. So if we do see a pullback here, that measured move target is definitely where I'm looking for this thing to hit here. Just like the S&P, as you can see here, we have just a hell of a lot of momentum for these bulls. Yeah, I know it's kind of scary, right, because you're right up in that measured move right now, but repeat after me. I don't care where we are on the chart. Stop making excuses. If you have enough momentum and a good setup, I don't care where I am. If I have enough momentum and a good setup, and of course a good setup is going to be the shallow pullback trap, the deep pullback failure, same type of thing we talked about on this S&P chart a few moments ago, right? So we know we have a lot of potential. Do we see a shallow pullback? If we do, really got to get a trap here, right? Because now think about it. This channel I've got right here, that could easily be right there. You know, this could easily be a little spike in channel there. I'm just simply drawing the channel a bit wider for the next setup. So a shallow pullback, remember, what's the problem? Location. It's not momentum. Momentum's beautiful, right? Location is the problem. Whenever location's the problem, traps always work best. Speaking of traps, look at that prior swing right there. I'll tell you, that's a great spot for a trap entry. I'd love to grab a trap off the low of this channel, rope in the bears, trap, failure, and then hell yeah, pull back and go, right? We may see 3 price action setups, trap low, again, below a prior swing. And by the way, remember, I love traps. Love when we see traps lining up right off the low of that channel, right? All of that momentum, big bullseye right back at the high, right? Big bullseye right back at the high. We haven't seen any deep pullbacks yet today besides that, right? That mess at 8 o'clock this morning. If it pulls back trap low, beautiful. Failure pattern, great. Pullback combination. Does that make sense, right? We go underneath the prior swing. trap. We get the bears coming in. They foolishly say, we've gone too far. They try to get short. No, we have not gone too far, most likely. And we buy into stop losses. Before we retest the high, we grab that pullback and we go from there. Trap, failure, pullback combination. Remember, I'm just simply drawing on the screen right now. I have hundreds of examples of traps, failures, pullback combinations, all part of that quick start, that free quick start class I mentioned earlier. What if we really pull back? I would like to get us down in this area right here. I think that area, this 26 to 03 area, I think that's the best spot here. So a really deep pullback. We're not seeing a trap on this. A little bit deeper pullback. Now what do? Yeah, now we look for the bears to get short, and we simply skip the trap. We grab the failure, the pullback combination. Target 1, back to retest the high. Target 2, right, is going to be that new measured move. Again, we don't exactly know where it will be, but we know that's going to be an easy target as we go higher there. That's going to be scenario number 2. Now, we talked about the deep pullback. Right? We love deep pullbacks because deep pullbacks do what? They give us great risk reward. But anytime you have a good risk reward, you're going to pay a price for it with momentum. It's just the way the market works, right? It's very rare you're going to see good momentum and good risk reward. It's just the way the markets work. Okay, so if we get a nice deep pullback, I love the fact that I can risk small to earn large. But again, if we really pull back right now, this range down here, which we know are magnets, right? Ranges are magnets. If it really pulls back nice and deep here now, okay, now I got to be worried about how the market, the bears, right? The bears are going to want to come in and they're going to want to grab it. Here's another variation that you want to kind of keep your eyes on here. Okay, as we get that deep pullback, we oftentimes will bounce off the moving average, right? We'll bounce off the moving average. When that happens now, draw that trend line down, and then what you want to do is as we pull over here now, remember, you want the bears to try twice in this example. Let them try once, let them try twice, and we can buy off that trend line, right? Same basic idea here. We get that deep pullback, great for risk reward, but not great for momentum. Let the bears try once, get back above that trend line, let them try a second time, right? So they try once, try twice. Remember, all that momentum, okay? Almost a guarantee, no matter how far we pull back, it retests the high. Now, I know, nothing is ever guaranteed. Is it possible the market doesn't retest the high? Of course, anything's possible. Right? But we're playing the odds, right? We're traders. We're playing odds. The odds are very good. We retest those highs. So watch that trend line as we come down. Okay, that's one more kind of variation of this as we go. If we didn't get that trend line, let's say the market just simply kind of, falls out of bed here, really stumbles. Okay, another variation would be let the bears try once, go up. Let the bears try twice, grab that trap. This is my favorite, right here. That trap entry. You see the difference there? It's the same basic pattern, right? Same basic pattern. Again, real strong pullback. Let the bears try once. Let them try twice. Yeah, I can buy right into those stop losses. But if I can get that trap low down here, man, that's a money trade right there. That's the best possible variation of the entry. And then remember, the market wants to go back to retest the high. So as it starts to roll higher again, now all the FOMO kicks in. See, a lot of new traders, myself included when I was a new trader, would have never dared buy that deep pullback. So you'll see a lot of the new traders or more, less confident traders, they will pile in now on that next entry. Okay, again, it's a 2-try failure into that trap entry as we go back up to retest the high. All right, and then of course, as we pull back, failure or reversal, right? We talked about the 1, 2, 3 on the S&P, the 1, 2, 3 go lower. Right? 1, 2, 3. Remember, the only way the bears can convince me they've taken control of this if they can jump off the moving average. Right? If they can jump off the moving average here, that gives those bears control. They're definitely looking for that to go back into that range. Remember, we marked the low, we marked the high, the new channel. Right? Don't go looking for these big channels like that. Don't waste your time. Mark it nice and tight. Right? At that point, the gig is up. Any pullback off the high of that channel right now is going to be sold. Okay, my favorites, as I've mentioned many times already, my favorites are when I can take that channel find that channel, find a prior swing, get that trap, get that failure, get that pullback combination, right? Bull trap, buyer failure, pullback combo, target is back down to retest that low. We talked about that on the S&P. Here's another one that does happen quite a bit. Let's say, for example, the market pushes lower. Again, this is a variation. The same thing can apply to the S&P. All right. I'm not sure I made myself clear on that earlier. Everything I'm talking about right now can pretty much be applied interchangeably to the S&P 500, right? So what I'm saying right now can also be applied to the E-mini. Let's say, for example, now that instead of breaking or instead of pulling back nice and deep here, the bears come in, right? Instead of jumping off moving average, we start to grind, right? We start to grind. This does happen. You know, we saw what happened here, right? It grinds. So sometimes what will happen is the market will run lower and it will start to kind of grind, and it will drive you nuts. It really will, because you're not going to get that really nice deep pullback. It's not going to make a lot of sense. In that situation, when the market begins to grind, these are runaway markets basically. And a runaway market says find a really tight channel and basically trade any pullback, right? Or maybe a trap off the high. Okay, so if it does start to grind, okay, anytime I see a market begin to grind, again, in this case, it'll pop lower, it'll start to, right? It's not going to jump off moving average, right? It'll kind of grind, right? What's happening is all the buyers who get over here, they're getting out. And so it doesn't require a lot of sellers to sell this thing. The buyers is getting out, so it just drops like that. What you want to do now is draw that channel really tight, like really tight. Again, I love traps off the high, but at that point, it's pretty much any channel pullback can be sold. Target again is back at that low. Right? So again, I'm going over some different variations. We'll see which one we get tomorrow morning in our trade room. It is definitely something likely tomorrow for a range up here. We see this big, strong move. If it starts going sideways here in a range, what do? Yeah, we find levels of support below the range. We combine those levels of support with what? We don't just pick a bottom. We wait for that failure, right, as we come off. The range overhead is the magnet. We trade the failure, and then we trade what? We trade the rotation. Trade the rotation, right? We talked about this last week a bunch, even on that psychology video, right? Trade the failure. Trade, again, what's a pullback? Is it a trap? We don't know. We'll know more once we get there. We'll trade that rotation as we go higher, right? Is that making sense out there, guys? I hope by now you've hit that like button if you're enjoying the video. Does this trade the rotation make sense to you, right? Let me know in the comment section below. And also, too, while you're down there, let me know what other stuff I can help with your trading. What's the biggest obstacle? Is it psychology? Is it finding entries? Is it managing positions? If you're still watching this video right now, I would love to hear what you think is the biggest obstacle for you right now. So if we do end up going sideways here, definitely watch for that range and trade that rotation. What if we keep going higher, right? What if this market keeps on going higher here? Well, we talked about the try breakout already, right? We talked about that. Let's get rid of this because we have a big milestone at that 39.25, right? 39.25 is where the market wants to go. If we keep on grinding, all right? If this market keeps on grinding here, we go higher, shallow pullback, higher high in price, that's your trap, right? It's a money trade right there. So again, if it keeps on pushing higher, right, kind of grinding, again, find those really nice tight channels and grab that first trap. That's a pretty easy money trade. Okay, another one you want to think about here now, kind of variation, again, that again could also be applied to the S&P. Let's say we pull back to the moving average. Okay, the buyers come in, they blast off the EMA. What's that called? It's a breakout. It's called a 1, 2, 3 breakout, right? 1, 2, 3 breakout. Mark up that high, mark up that low. You got it. Drill down, find your entry there. What if they really pulled back like that? What would you do? Yeah, try. 1, 2, back up again. Same idea we've talked about already, right? Buying off the low, deep pullback, try failure to run the price back higher again. All right, and again, you'll see examples of how we trigger those entries inside that free class. All right, guys, I've got one more breakout trade. For you. We'll talk about that on the gold in a moment. All right, guys, but I think we have a pretty good plan of attack here on the Nasdaq. At this point, it's just how far do we pull back, or do we go sideways? And again, if we keep on grinding higher, you get a pretty good plan of attack there. Just don't chase it as it goes higher, right? Either wait for the pullback in the 1, 2, 3 breakout, find that channel, and then buy that first test, or buy the 2-try failure, or right, wait for it to go higher and then grab those traps. That way you're not just simply chasing it as it goes higher. Wait for the trap and then grab your signal from there. Let's wrap things up here now on the gold. Still got some tricks up my sleeve here, so make sure you keep on watching here tonight. What's going on the gold right now? What's going on the gold? So when it comes to gold, we're definitely bearish right now. That is for sure. I think there are probably 3, maybe 4 components on this gold chart right now. One of them, and I think the most important component, is the range. There's a range here right in the middle, maybe not the middle, but right in the center of that chart, right? So they get a bear market down into a trading range. Okay, we go sideways, we pop up, right? The buyers try, they fail, and now we're trading the rotation. Okay, that's probably the most important clue on this chart right now, right? So bears are trying to finish off the rotation. Okay, they got their short off the high, and now we're trying to kind of run this thing lower and finish off that rotation. Okay, the second kind of component of this is this strong move down. Okay, that strong move down. Now, why is that strong move down a big deal? Well, because anytime we see a strong move in one direction, we know the odds are pretty good. They're going to pull back. In this case, the buyers will try and fail, and we can retest that low, right? This is the exact same strategy we've talked about, giving me reasons to buy the S&P and the Nasdaq. This is a different direction, right? So strong move down on the gold says, where's my bullseye? My bullseye is right back to retest the low. And that's probably the biggest concern we have right now in the gold. We're definitely bearish. There's no doubt about that. But as this market sits, look where it sits right now. It's sitting right on that prior low. So does that look like a market that really has a lot of confidence going lower right now? Probably not, right? Probably not. Third component, right? Third component here is basically a spike in channel. It's a strong move down, shallow pullback, lower low in price, mark up that channel, and there are the traps right above that high. We talked about this, this kind of strong move down, shallow pullback, lower low in price, right? We talked about this setup. Okay, because I love these we call them 2-try traps, right? You can sell it right above those highs there. This is pretty much the same thing. It's just a bigger example of it. So strong move down, relatively shallow pullback, lower low in price. You have to think there's a lot of bears sitting right up around that area to sell this thing back down again. You could also say it's a spike in channel, which I think is true, right? It's a strong move down in a bit of a channel. Okay, there's your spike, there's your channel. And this is the base of the channel. All right. If you're a client of mine, you know spiking channels are notorious for pulling back into the base of that channel. All right. So, think about now those kind of clues we're seeing here. We know we're bearish. There's this, you definitely can't look at this and be like, oh boy, I can't wait to buy this thing. Yes, we can definitely buy this market tomorrow. All right. But trying to be a buyer right now, probably a little bit dangerous here to be a buyer just yet. How do I sell it? How do I buy it? How do we trade this thing? The biggest problem I have right now is if we go higher. The bears did a pretty good job of getting short off those levels of resistance up overhead. But if this market pulls back, I'll tell you, I love this setup right there. I like that trade right there. The problem is, though, I don't like it in this spot. And there isn't a lot of bear momentum. Again, if we can see a strong move down, shallow pullback, lower low in price, I love that short, right? Love that short. But that's not it right now. So don't confuse that area for it. What I'd like to do is, if the market runs higher, there's really 3 ways to trade this thing as it goes higher. One would be, can I get up around these highs? And because I'm concerned about location and that trend line coming up right now, a trap entry is going to be your favorite spot. Now, we see a lot of these trap entries towards the highs of a gold range. I'm not sure what it is about gold, but gold loves these types of entries, right? Let them take out that high. Let them run it up the ladder. Let them take out these highs over here. What will happen is the bears want to avoid selling into that rising support, right? So let them try once, Bulls try once, let them try twice, get that trap, and that will alleviate that problem of selling into that trend line. At the same time, though, if this market really starts to pop, I mentioned earlier, this is where things might get fun for the buyers. A strong break up for a 2-try trap. I really like that trade a lot. In fact, that's probably one of my top 3 trades for gold tomorrow, right? Because again, you've got this trend line here. They haven't given us any evidence they're willing to take it lower. If the market pops higher, the trend line is great protection. So keep an eye on that strong pop up, that shallow pullback, that higher high in price, right? And that trap entry on the way up to where? On the way up to this area over here, right? So again, 2-try trap entry as we go. Now, that may turn into a full-blown reversal, right? That may end up going up, pulling back, and buyers just blast off the moving average, right? Didn't do it here, didn't do it here, didn't do it here. Remember, you can't necessarily just buy that first pullback. Again, if we see it go up, shallow pullback, higher high in price, that trap, again, I don't really care where I am. That's a good trade, right? That trap entry. But let's say, for example, right, the buyers come in, they really rip it going higher, right? That'll be your trap entry into then mark up that new channel, drill down to your faster time frame, find that failure into that pullback, right, in a combination entry off that low. As you can see, this could get really good for the bulls. The trap entry as we go higher, the failure, the pullback combination after we get that 1, 2, 3 reversal pattern, right? And then where's our objective to go higher here? Look at all the space these buyers have, right? Can you say short squeeze? Absolutely. So if we can get this into pop, get that, again, get that trap, maybe it jumps, grab that new channel, there's some really good money there, right? If you got your game face on tomorrow, going higher here, all right? That would be a great way to buy this thing as we're going back up into that range. Now, as we go higher, could I sell this? I definitely can. And I love this area to get short. The problem, though, is as we go higher, what's the problem going to be? 1 is momentum. 2 is going to be that trend line. Can we still trade it? Absolutely we can. In this case, we need that special variation of that 2-try failure. Buyers try once, pull back. Buyers try twice. There's your trap. Okay? That's a really good trade. Then, if we can get that run going lower, now the fun happens. Find that new channel. Remember, it's a range down there, and trade the rotation. Make sense, right? So again, it's a 1-2 failure. Why? Because you're worried about momentum, right? It's a trap. Why? Because you're worried about that rising support. Then once momentum turns, then we drill down, we find that aggressive entry. That's the entry where you can really get aggressive right there, right off that channel. Because now all of that momentum now is going to come crashing back down, right? Targets, of course, now back to those lows, but we get a bunch of really great support areas down here, right, as we go deeper into that 1747, 1750 area. All right, what if the market runs lower? What if the market runs lower? What if we don't get this pullback that I almost hope that we get? There's 2 ways to trade this as we go lower. One is going to be a breakout pullback. Think about this area right there. Now, think about the market making a strong run down, pulling back above the moving average and trapping in those, in this case, the buyers, and selling into their stop losses. Guys, we've talked about 2 breakout patterns already. We talked about the 1, 2, 3 breakout. That was, of course, on the Nasdaq. We talked about the 2-try breakout right here on the S&P earlier, and now this is that breakout pullback. Right? The breakout pullback. This is the one that I wish we saw more of these, to be honest with you. Right? So strong move down. Think about where the underbelly of that range is. Okay? The key to the success on this entry is the strength of that move lower. Okay? You're never going to see me do something like this where it barely moves below it, right? That is a loss waiting to happen right there. Okay? It really needs to push through those lows. Right? You can see right here, right? Strong move down. It really has to push through that low. Well, I shouldn't say crazy, but the odds are not very good to use it that way. Okay, so if that's my support area, I want to go really strong through it, right? How strong? Strong enough so when I pull back and touch that area, I'm well above the moving average. Okay, get those buyers in to come in. Remember, anytime we see that much strength, the odds are very good we retest that low. Don't just sell the pop. Wait for the buyers to try, find their stops, and sell right into those stops, right? Breakout pullback style. Okay, that's a really great trade as long as, again, we get the strength going lower. Okay, we see quite a few of these in our trade room. I cover literally lots of examples of this same setup in that free quick start class. I hope by now you've grabbed that link in the upper right-hand corner. Now, can I buy down here? Absolutely you can. Absolutely you can. Got a range, right? Ranges act like magnets. Let's say we take out that pendulum swing. Okay, the range is the magnet. But now the bears come in. They try to go it lower once. They try twice, right? Now, this one all depends on where the entry is. If we go back lower, bears once, bears twice, again, why twice? Because we're going against momentum, right? We're going against momentum. Takes lower, bears once, bears twice, buy it back up again, right? We take it lower, bears once, bears twice, we buy it back up again. If I can get the entry well below that range, that's a money trade. But if it likes to swing back in like this, now you want that trap. Why? Because traps are better for entries, right? Traps give you better entries. It's the same basic idea, right? Take out that low, complete the rotation, and then look for that rotation back up in the opposite direction. Bears try once, bears try twice. Maybe it's a trap. Maybe we're low enough to grab that failure. We'll know more of that tomorrow once we get there. All right? But at least now you guys have a good plan of attack for tomorrow. So will we get that reversal? Will we get the breakout pullback? Only time will tell right now on the yellow metal. In the meantime, speaking of pullbacks, how will this market pull back on the S&P or the Nasdaq? No matter what, we are prepared and ready for battle tomorrow morning. Now, speaking of tomorrow, don't forget, 8 o'clock Eastern time, all of our advanced members will get together and we'll trade this stuff together. I'll put all the membership links you guys need right in the description of this YouTube video. I'll put a big button for you right below this video on our website. Hit that button, grab that link, get registered for tomorrow morning's trade room. You got to be a member. Our advanced membership is a lifetime membership. It includes all the video classes, all the trading sessions, and of course, all the tools and templates. Trade right along with me every morning at the opening bell. I'm going to be here for the rest of the evening. Don't be afraid to call the office if you have any questions. You can always use live chat on the left, live chat on the right, and of course you can drop questions in the comment section below. Guys, thank you so much for sticking around tonight. Thanks for watching all the way to the end. Hope you learned a bunch here. Don't forget to follow the plan for tomorrow, and as always, be here tomorrow morning, and we'll trade this stuff together in our trade room. Got to run for now, though. Hope you guys had a great day out there. We'll see you guys tomorrow. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.